Hello and welcome to Share Talk Presents, a live Q&A session with Power Metal Resources. And the guest of honor today is Paul Johnson. How are you today, Paul?
I'm fine, Zach. How are you?
I'm doing fine. I'm certainly more busy during lockdown than I am normally, actually. It's one of those weird things of life. But this is a Q&A session, hopefully quite a detailed one, which will give people a bit more than they normally get from sort of parallel or analogous events. Normally things tend to be rather rushed, or they're either too fast, too slow, or too detailed, or otherwise. We'll try and get the balance right today. Just want to start off with a general view from you, Paul.
Sure.
It's been against all the odds after the pandemic started in March. We've actually seen commodities, metals of all shapes and sizes actually rise. Even the industrial ones have risen, which is perhaps a bit counterintuitive. What's your take on the whole situation?
Oh, well, I'm no economist, although I did macroeconomics at university in one of my subjects, and I got a first. I didn't get many firsts in at university, I can tell you. And I asked the tutor, why did I get a first? Because I don't understand what's going on. And she said, well, that's why you got a first, because anyone who thinks they know what's going on only gets a 2-1 maximum. And I honestly am not the best person to ask. However, I do think that we're in a perilous world at the moment in many, many areas. And there are two ways out of it for investors, the markets, for the economies and so on. The first is a default to safety. So precious metals, gold and silver, I think will be a huge draw for investor money. The second way is a massive expansion of infrastructure programs and spending. And the simple fact is that wherever you look, really, we haven't been spending enough money in supply. So we haven't been building the mines, finding the resources in the base metals and strategic metals. And we'll have a situation, I think, in the coming years where demand will be rising against a very difficult period of supply attrition. So price-wise, I think we may well see commodity prices in the base and strategic metals at significantly higher levels than we've seen before. And that will, of course, be great for all mining-related activities, but particularly for the junior resource sector, where we tend to be leveraged quite dramatically to the underlying commodity price. So I'm very positive. I was chatting before about previous conversations with some of the Canadian veterans that I've had, who were saying that really 2008 to 2011, which is a big period where I had a massive return on the junior resource space, was a bit of a blip. And we haven't really seen a full-on commodity boom run for quite some time. I think we might be on the cusp of something rather special.
Well, I was actually going to feed you with that very emotion, because I want to make people cheerful at these difficult times. But I think the point I was going to make is that in the way that we didn't actually have the big boom that we expected in 2008, 2010, that might be actually hopefully saved for now, 10 years later, when we really need it, and when hard assets are really count. I mean, in terms of safety and the like.
Yeah, very much so. From an investor perspective, the difficult thing is, if you've been in the bearish markets of recent years, you'll be wanting to take money off the table when you see a decent price rise. It could be the wrong thing to do. Holding on a bit longer might be the wise move. If you're a newer investor and you see that your share prices go up dramatically, your portfolio with it, you might think you're master of the universe and this will never turn around. Well, yes, we know it turns around and it goes the other way. So we're in uncharted territory, I think, at the moment, and it's a day-by-day approach I'm taking from an investment perspective in the markets. Not selling too quickly, I think, is important, but not actually thinking that I am an investor genius when something goes up, 100% over a month, and just really gauging the situation carefully.
But is it, the other risk is obviously, this could be a boom time and gold goes from 2,000 to 3,000, etc., and silver doubles and all that sort of stuff, which would obviously be nice. But is there a risk, and are you wary of the risk of buying assets now when it could be the top and being left high and dry for, like as people were at the end of the last, at the end of the noughties, let's say?
Okay, well, from a power metal perspective, we've been pretty active buying for the last near 2 years. We started off in February 19 when we restructured and refinanced African Battery Metals, just before we changed their name to Power Metal. And we had 3 legacy Western and Central African interests. We've taken 2 of them forward, and since then we've bolted on 7 additional interests. So we've done a lot of corporate work. We don't have to be worried about, do we need to do more desperately? No, we don't. Could we do more? Yes, we have a huge pipeline of interest coming into us all over the place. I get text messages, WhatsApps, emails, phone calls, and all sorts that offering new opportunities. We would only take on additional projects if we really felt it was a potential game changer in the portfolio. So, no, I'm not. I think our work is largely done on the acquisition front at this moment in time. So the prices of projects have increased quite dramatically, in fairness. So anyone who wasn't doing the corporate work we've done in 19 and 20 will be facing a much steeper bill to enter into new project opportunities now. And I suspect in 12 months' time, it will be a lot higher still.
Right, and the other thing I've heard from other companies in the resources space, there are distressed sellers out there for one reason or the other. I presume that you would obviously always be looking out for that kind of opportunity.
Well, yeah, in fairness, you get more distress when the assets are rubbish, because they really do want to offload. Distressed sellers, there will be a tail effect. There's always, after a major run-up in a sector, there's always a 6-month, maybe 12-month max period where there are still some good projects that could be acquired on decent terms. We've made our business to do good commercial deals for shareholders, but not to treat the third parties unfairly or unreasonably. So even in very difficult times, we've tried to make the deal terms fair. Sometimes it comes with money, an investment in a listed PLC together with a project stake. Sometimes it's an earning and so on. I would say that you have to keep an eye open. There are still opportunities around. We do have a big pipeline. We may well do other things. At this point in time, I don't know. But if we never did another thing, I think with the 9 project interests, we've got enough to work with for sure.
Well, I mean, that was good that we got sort of the general overview of where we are in the market and the cycle in the first few minutes. I'll try now to go through, gradually in a subtle way, the questions that have come in. We've got some questions that came in a while back, and then the questions which are sort of live in front of me now. So I'll try and do that in a subtle way. You've sort of answered it already, but have you considered increasing your exposure to African gold in countries such as Mali?
Yeah, funnily enough, we do get lots of African gold opportunities coming through. If you've looked at our business ethos over the last couple of years, you'll see that when we bring a new project in, what we're very careful about is, obviously, deal terms have to be reasonable. It has to be an economic entry. We can't be over-committed financially, so we have to put huge amounts of money in, because if the market sees that you might desperately need cash and you're forced to pay cash out, it can really put you into a corner. So our deals are flexible. We are largely in control, or almost entirely in control, of whether we spend any further money on anything. It's how can I put this without saying inappropriate things? African opportunities often yield the biggest potential. Some jurisdictions in Africa have incredible resource prospectivity. The value that's available is tremendous. You have to weigh up the geopolitical risk. You have to weigh up the fact that you need a local operational team in place, prepared, able to reliably, safely, securely, and honestly undertake the work that you want them to do. You have to get them to report back in the way that you need as a professional business, running through a PLC wrapper. All these things have to be taken into account. Now, to do the due diligence required to assess if something is acceptable is quite a hefty task. particularly at the moment when we're running with 9 projects. We don't want to take things on without properly checking out, if something is good quality, it has the right team behind it. So there's so many different factors. I would say if we came across an African gold opportunity on the right financial terms, without overcommitment, with the right local operational team that we could rely upon, then we may well expand into gold, more gold in Africa.
Right. I mean, that goes on to a couple of questions here that I have. What do you consider to be your key project or projects? And a question that just come in, a potential gem in your portfolio is Victoria Goldfields. Have you got any update on that?
Yeah, okay. Well, let's go to Victoria Goldfields. We have 13 license applications in a joint venture with Red Rock Resources, ticker RRR. Power Metal have a 49.9% stake in that joint venture. We submitted the applications over 2020. We have 3 priority applications in, and we are just waiting the moment when those applications are granted. We've done huge amounts of work building project reports for each license application. We've done a National Instrument 43101, which underpins and assists with any listing of some or all of the interest on the North American Stock Exchange, which we've talked about. We've got an office in Ballarat, staffed up, equipped up, ready to go. We've done huge amounts of exploration planning. We're chomping on the bit right now to get on with that exploration work. And on the ground, we've got multiple targets across the first 3 priority license applications. Generally speaking, there is gold prospectivity across the entirety of our license application area, which is about 2,400 square kilometers. Only one of those license applications, we're in a competing situation. The other 12 we're not, which is fabulous. And we're just ready to go. It's like we're waiting for the starting gun to fire.
Right. So Victoria is a highlight, let's say. Anything else you would, you'd say, well, this is the jewel in our crown, literally?
You see, I would say we've got 9 jewels in the crown, because you would expect me to say that, because the reality is that you don't necessarily know where your first big discovery is going to come from, or where the first big corporate deal is going to come from that can add tremendous value to your balance sheet. And we have to keep pushing all of our 9 interests. Now, of course, there are some obvious highlights. Australia, gold, Victoria. We have one of the largest footprints there are around. We secured license applications around Ballarat when the COVID situation was taking everyone's attention in the investment market. We worked continuously, strange hours to get the applications in and to do it in a thoroughly professional way. And we've worked tirelessly on that in 2020 to build up our technical knowledge and preparedness for moving ahead with exploration, and also the corporate work behind dealing with third parties who have an interest in what we're doing, and also the IPO of some or all, potential IPO, I should say, of some or all of the interest. So there are other areas, though. We're drilling in Botswana at Malopo. We're halfway through the 2,500 meter program. 2 holes of 4 done. We've got great core recovery. We're doing technical analysis. We've got downhole geophysics. We've got all sorts of different things underway now. In that project, any of those technical review steps, and they could yield something quite material. So we're just pushing ahead, trying to stay sane, because there's a lot going on, and just waiting for the moment when something happens. Our game is about doing as much exploration work and corporate development work as we can in the shortest possible time frame, and then things will transpire from that work that make a difference to our shareholders, or that's what I believe anyway.
So it's not jewel in the crown. It's like deciding between which is your favorite child. You could never decide between the different ones. You love them all equally.
Sort of, but everyone has a favourite from time to time. You know, we have a capital allocation approach to our work. You know, we have a good, strong financial position. We publish it quite regularly. Not many companies do that, but we feel transparency is important for the marketplace to see where we are. And of course, we allocate capital based on the knowledge that we have of a project, its potential, and we're spending a reasonable amount of money on Malopo to drill that project. We're spending money with our partners Kavango at the Kalahari Copper Belt, just down the road from where at Metal Tiger we made the big T3 discovery. We're spending, money in Australia to build up that joint venture. But I think if you said to me, where will the first major discovery come from, in my view, well, I might have an inkling, but I wouldn't say it publicly.
Right. I mean, actually, I suppose that gets us on to one of the questions that I have, a couple of questions here on the financing front. Somebody's asked, is £2 million enough for the full spread of your projects, given you're spending money here and there? And leading into that, I suppose, is also your strategy of a warrant-funded business model. I mean, I think that's something every day I wake up and the sun rises and you raise some money from warrants as well. So it's the two things that happen every day. Apparently, is that going well, and is that sufficient for your needs?
Okay, so yeah, the £2 million. You have to remember that having been a director over the last 8 or so years, starting out with ECR Minerals, where we had to do a rescue approach really with ECR back in 2012-13. I've always been cautious and careful. So the fact that we can turn off our cash burn at almost any moment, not of everything, but of most things, means that we have a degree of controllability, flexibility in our financing model. So were we to go hell for leather on everything, then no, £2 million would not be enough. Is it enough for what we need to do in the foreseeable future? Absolutely, yes, it is. If we raise additional money through warrant exercises coming through the door, what do we do with it? Well, we don't sit there and build up the big cash pile. It's not Power Metal Bank, it's Power Metal Resources. So we will apply that to exploration, corporate development work. Fortunately, we don't have a vast overhead as a PLC. I think we run ourselves really tightly. So most of our disposable cash, as it were, goes into exploration and corporate work. We don't pay ourselves vast amounts of money. We don't have stupid advisory, contracts in place. We work with good people on proper, reasonable and fair terms on all sides. So I think the warrant model itself is something that I've done in various vehicles before. We've seen some of the biggest gainers on the market that have worked a warrant model. The best example is Greatland Gold, that charged up its finances back in 2017 on the back of significant warrant conversions, deployed that capital very efficiently, and of course found the Havieron discovery. We've seen it with Eurasia. We've seen it in my days with Metal Tiger. We had warrant conversions and the share price went up dramatically. So what it does is it smooths the flow of capital into the business. I would be more worried as a CEO if I saw my share price spike up dramatically and then all of a sudden, shall we say, finance partners knocking on the door offering us capital and then ending up with doing a placing at 30% of the high on the spike. I think that's more damaging to investors. The gradual feed in of warrant exercises, the gradual conversion process is a smooth process. It's working particularly well for our business. I think we're seeing strong performance in the share price, notwithstanding warrant exercises, and it's making me confident to be able to take the steps as a CEO to invest quite heavily in our projects and push the chance of that discovery happening much higher.
Yeah, isn't that? I mean, that's something to maybe explore a bit, because warrants seem to be like as you were saying, it's almost like a dirty word, like a placing or a rights issue. That would actually brings money into a company in a sort of slow release tablet kind of way, rather than having the big, the sort of open heart surgery that a placing is. So, isn't there some work to do just to explain to people what warrants are, and they're actually good? They're a good thing, not a bad thing.
Yeah, so when we did the restructure refinance back in February 19, we raised £1 million for Power. And we raised that money at 0.5 pence. And we gave a 1-for-1 warrant. So every placing share that someone took back then, they got a warrant at 1 pence to buy a share for a 2-year period at 1 pence, if they chose to do so. Now, obviously, they would only exercise that when the share price was higher than 1 pence. And we've seen quite a dramatic number of those 1 pence warrants converted and exercised now. Now, it provides ongoing finance. It's the easiest finance to manage, actually, from a company perspective, because people send you cash and send you exercise notices. You announce it, it goes out to market, it increases your issued share capital. But if your placings, your financings have been done with the right people, so not people who are just going to flip out your stock at the moment's notice or take small margins and crystallize, but actually will be investors alongside the company and really work with the company and let the company flourish, then you find that the conversion process is smoother. It isn't disjointed, and the capital feeds into the business quite well over a period of time. Now, the directors of Power Metal hold a significant proportion of the outstanding warrants, and we also have options in the company, which is another mechanism to finance the business. Director options have always been priced at a considerable premium to the then market price when they were issued. So, for example, I think our recent warrants were priced at 2 pence when the market price was just under 1. So we had to increase the price by in excess of 100% in order to get any kind of benefit from the options. So all of these different tools are quite useful. Ultimately, Zach, our aim is to go towards financial self-sustainability. And the exercise of warrants and options will help with that. We are looking at vend outs of certain of our interests. We've talked about some of those vend outs with Australia Gold and an IPO, some or all of that joint venture. We've looked at, or we talked about Kavango Resources and the IPO of the strategic joint venture there. And there are other things in the current portfolio and in a potential pipeline of opportunities that could follow a similar pathway. Now, when we sell an interest, what happens is we move away from a project stake, and then we get equity in another listed company, for example, and we might have some warrants ourselves in that listed company. We might have royalties over a project and other financial instruments. We then take that and put it onto our balance sheet, and it forms part of our working capital. It's stock, for example, that we can sell to crystallize cash should we need it in the future. So all of these different mechanisms of financing the company can help us to be self-sustainable, as it were, so we can fund our own operations. You notice I haven't mentioned the dirty P word in all of this, or the F word, placing or financing, because as a director of a company, the last thing you should ever do is rule out a placing or a financing. But in our business, we've always undertaken those placings and financings on fair terms for the existing shareholders. And that's absolutely key, because if you buy a share, a Power Metal share on market, I give you my word as the CEO of the company, I will not hack your legs away with a heavily discounted financing like so many companies will do. That is not the way I've run the business, and it's not how I would run the business in the future. Now, we are well funded as we stand at the moment. So, and we publish those figures. People can see those figures, and we're going to give more information as we go forward about the strength of our financing position. So I think on financing, and as a 6 to 7% shareholder in the company, the largest shareholder at the moment, it's in my interest to follow this ethos more than anyone else's. We are going to carry out our financing affairs in a proper manner.
Yeah, I think I can't get enough of this warrant stuff, actually, especially as the people who throw stones at the shorters and other mudslingers who I'm sure you're aware of in the market. They say, oh, there's warrants, there's millions of warrants here, there's millions of warrants there, the shares are a short or whatever it is. There's a couple of questions here.
Sure.
How do you keep the warrants in the hands of long-term investors?
Well, you make sure that when you do your financings, they're done with the right people, with the right ethos. When you have to choose your brokers carefully. If you're using brokers, if you're doing direct subscription, you have to be careful about the subscribers to make sure you have the right people involved. Now, you don't have 100% controllability over these things, but you have a great degree of influence. Now, we're not like we're a director coming from overseas who doesn't understand the UK market, who runs a company in London and gets mullered by the market every time they want to raise some money. I've seen that so many times with directors who don't understand how this market works, raising money and being brutalized in the process. The problem is, it's all right for the CEO to get brutalized because they get paid for it. But the shareholders who put cash into the company need to be protected. You need directors who understand what's going on and can protect the interests of shareholders. And that's something that's been close to my heart for quite a long time. If you want to short Power Metal Resources, go ahead. Do your worst. We've got 9 projects. We've got active exploration operations across many of our interests. We've got some big drill programs underway. We've got assay results pending. We've got a huge amount of corporate work that's being done in the background. We've got interest in what we're doing. It's obvious that large firms, mid-tier firms, are looking for strategic assets, particularly in gold, particularly in nickel, in copper. We've got exposure to all these commodities. So perhaps in my investment life, perhaps in my PLC director life, I don't think I've seen a better position for a company than the one we are in at the moment. Are we going to find that major metal discovery or discoveries? I don't know for certain until it actually happens. As I said before, I might have a feeling for where it might happen, but we're going to push on hard, continuous. We're going to invest that money. When you see a warrant exercise announcement come in, rest assured that isn't sitting in the bank account, ready to pay out, in a vast salary to me or to the rest of the board. That's being allocated almost immediately to where can we accelerate the business and where can we do more.
Well, now I understand why you haven't ever asked me if I wanted to buy some warrants, because obviously I'm not suitable to that kind of game. But I've just got a couple of questions here regarding maybe it's like more controversial ones.
Sure.
I think one is regarding Red Rock Resources. It's with a company far from being, and I quote, far from being a private shareholder friend over many years. Do you see any red flags, or will it be different this time in that relationship?
What, with Red Rock?
Yeah.
Red Rock had the vehicle in Australia. It's had a lot of experience. Both Andrew, as the chairman of Red Rock, also chairman of POW, had lots of experience in Australia. Red Rock was able to apply huge amounts of time and energy, Andrew included, in building that portfolio in Australia. Could I have done it by myself? No chance, and not to the extent that it was built, not with the precision on the mapping out of the different opportunities, the submissions to for the applications, the huge amounts, hundreds of hours, maybe even, probably thousands of hours of work that's gone into building that portfolio. It wasn't possible. So, is it better for us to have, 100% of a couple of patches of ground in a hastily arranged holding company vehicle, or is it better for us to have 49.9% of one of the largest strategic footprints in that area? In joint venture with Red Rock, every day of the week, it's better for us to go down the latter route and to have exposure to a dramatic, potentially company transformational area of ground in probably one of the hottest postcodes, to use that phrase, for gold exploration that there is in the world today. So there are always personalities in our world. The more gregarious characters in our world will attract huge amounts of negative attacks when things are not going well, and they haven't gone well over the last few years in the market. And in some cases, that criticism is justifiable. Andrew, as our chairman, has run Red Rock for quite some time, and has seen incredible lows and highs. Back in 2008, you could buy a Red Rock share at 0.25 pence in then share, money, as it were. And had you have held that stock until 2010, you could have sold it at 22 pence. So is that an 80 times or so increase in the space of 2 years? Now, of course, then it's pulled back an awful long way. I think the key behind many of these junior resource companies is that in positive cycles, you have a driver characters who are prepared to take risks and push the boat out and try things, and they do very well in positive cycles. I include myself in that. I'm particularly good when there's a positive phase in the market because I'm continuously doing stuff. The problem is for a driven character is switching it off and controlling things when the market gets difficult, and that's where we struggle. So I would invest in myself in a positive climate every day of the week. I'd invest in Andrew in a positive climate every day of the week. I might not be so eager to invest in either of us if market conditions were difficult. But at the moment, I think we're facing the kind of environment where the Red Rock Resources opportunity, people like myself, people like Andrew, will deliver some quite significant investment returns potentially.
But it almost goes back to one of my initial questions that, you sort of want to make sure that you're not left holding the baby, not to mix too many metaphors, but when the music stops, that's the real, and in the mining sector, the music can stop at any time. Let's say, presumably with the diversity that you have, like the 9 different throws of the dice you've got, the music won't stop at the same time. Gold might become regarded as being a sort of the failed Bitcoin of its time, and people just say we're going to go Bitcoin, we're going to forget gold and silver. Vanadium might become very strong, or that's the thing. You've got to have a portfolio that maybe can take the slings and arrows of the cycle.
Yeah, I think where the companies go wrong sometimes is that they overcommit at the higher levels. They think they're corporate masters of the university. They commit to too big earning expenditures that are fixed. They can't shake off these big, heavy financial burdens when things get difficult. In our case now, and I will make sure to, in always possible, that we never overcommit, no matter what the stage of the market, because you don't really, when things are going fantastically well in the space, like in late 2010, early 11, you kind of think it's going to go on forever. You've got to temper yourself and be careful. So control of your forward overhead costs is absolutely key. The diversification model is important. We've got precious and base / strategic metals across multiple continents. Our geopolitical risk is managed because of the diversification. Our commodity risk is managed. Geological risk, we have lots of different types of projects. So we're kind of okay. There are different stages of development, so we're not coming all at the same time with the same stage of project. We've not got everything drilling at the same time, So we've got a different mix of things happening, which is important. I think we're okay. I think we're well positioned. Whatever happens in the space, I think we can manage our affairs. We certainly are the working capital level that gives me a degree of comfort, so we can be pushy with our programs, whilst knowing that if we did see a tail off in the sector, we can kind of crunch down and last for a heck of a long period of time if we had to. I don't think we're in that zone. I think we're in the zone of being gregarious, positive, and proactive.
So basically, if the music, you can see, these things, let's say COVID, there was a 3-month window by, the turn at this time last year, it looked as though COVID was on the horizon, but it took 2 or 3 months to come through. So let's say you had a bit of time to do what you had to do, if you were a forward planner. Now, if there was a change in the atmosphere, you wouldn't be left sort of high and dry in that way. You feel confident that you could withstand normal conditions rather than boom time conditions.
Yeah, I think so. But you have to remember, I think, Zach, that we're going for major metal discoveries. You find a big nickel sulfide deposit. It doesn't matter what the market conditions are. It's massively valuable. You find a major gold deposit. It doesn't matter what the market conditions are. It's, hugely valuable. Yes, these things will be a bit more valuable, potentially a lot more valuable if it's a boom time in the market. But versus a small junior microcaps valuation, if you get a big discovery, which is what we're aiming for, then we'll see a big valuation uplift. That's just the way it is.
Right, a sort of straggler question, which was sort of mesmerizing me for the last 20 minutes or so. If acquisitions are unlikely, which is, I think, what we were saying earlier, you've got sort of, basically, what you want to have on your plate. Is merger activity another possibility, e.g., with something like Kavango?
Oh, blimey.
Yeah.
Mergers are often seen as a good idea. They're an awful lot of work to actually get them done. The administration process is quite significant. There can be some quite attractive propositions from time to time that come up. We're firing on all cylinders across 9 projects. So I think if I did a poll with the shareholders and said, look, do you want me to really keep the pressure on these 9 individual projects, or do you want me to take 40% of my time and go down the merger route with a single target? What's your preference? I'm pretty sure that at the moment there would be a desire for me to focus on the 9 projects and go find that discovery or that major corporate deal that can change the business. The part of the challenge is having enough team members within the management team and the management structure. We're building that at the moment. We need to enhance our kind of strength from an operational perspective, because as our projects build in significance and stage of development, they're going to need more management time. So we're doing that. We've got the working capital to do that. We need to look at various elements of the administrative and marketing communication sides of the business to build our strength so that the people can take on some of my workload. And as that happens, and as the operational structure and the managerial team is built, then we can do more gregarious things like look at mergers, look at additional chunkier acquisitions. At the moment, we are just firing up, as I say, across the 9 projects, and that is my primary focus, whilst quietly in the background building the structure that we need to be a mid-tier company.
But I mean, so basically the answer to that is that you wouldn't really do that because it would diminish your bandwidth in terms of your day-to-day operational side. If
you had a knockout opportunity, you'd have to think about it and consider it and weigh up all the consequences. At the moment, we're delighted to be investors in Kavango. We've got a great working partnership with them on the Kalahari Copper Belt. As I say, just down the road from the T3 discovery that I had as CEO of Metal Tiger. We've got the Ditau Camp project where we're pushing ahead, as has been seen today in the announcement, and things are working well. I won't go any further than that.
Right, well, I'll take a question from somebody I actually know. I'm not going to say, I don't want to embarrass him by saying who it is, but a nice question from me. You normally ask the difficult ones, so this is a nice one. Are there are a number of AIM-listed sector juniors at decent project portfolios, but have failed to deliver shareholder value, mainly due to lackluster management? As POW grows via market value, would it be easier to acquire such companies rather than seek new virgin projects? So it's a bit of a follow through on the last question.
Yeah, okay. It is quite tricky to actually do the acquisition process because of the time commitments. But the reality is that as our market cap grows and we're now, circa or just above 25 million, then we can use our paper. And we can go and get things, and we can build the value of the business through acquisition. It's absolutely true. It would be a standard process for any company that sees a material adjustment higher in its market valuation to build the company through acquisition using paper. Of course, you've got to be careful with these kind of deals. The reality is, if I did an acquisition if our market cap was 5 million and I acquired something for $1 million, it would be 20% dilution. Now, if I acquire that same project or business for when we're 25 million cap and I spend $1 million on it, it's 4% dilution, whatever the figure is. So there is an advantage with size, and we are kind of in that zone at the moment where with plus 25 million cap, you're getting a lot more institutional interest as a company at that kind of level. They're prepared to look at you and invest in you, whereas they wouldn't touch you if you were 5 to 15 kind of bracket, or up to 15. We have the strength in the business valuation. We're showing a bit of history now at these levels, which is great, so that people are more prepared to accept paper. You've got to be careful with paper deals so that it can't be dumped on the market. So you need proper controls on selling into, so that's I was going to say lockdowns, but lock-in periods, and then followed by orderly market periods and so on. Yeah, it is an absolute option for us. And it will be the same for any company in our position, to be quite frank, to look around, see what opportunities were around, and to think about using the strength of the company and its valuation to go and build the business aggressively. Organic growth is fabulous. It's my main focus, but you can't deny there are opportunities.
I might give you one or two suggestions myself offline, actually, on that front. But the next question here is, I suppose I asked you about it a little bit a while ago, but somebody here saying, I'm no mining project expert, but £2 million of cash or whatever the number is, and it's presumably near that level, resource that spread across 9 projects sounds a bit thin.
Yes, it would do in a company where the corporate management team were focused on, I was going to say flying to fancy jurisdictions, but it doesn't happen that much nowadays. Spending vast amounts of money on corporate central overhead, where paying super expensive fees for fundraisers and all that kind of thing. Our business is tightly run, and we don't have that vast corporate overhead. So most of our money, significant proportion, goes on our exploration and corporate development work. We are running a controlled ship in terms of our project spend. So £2 million is not a humongous amount of money in the scheme of things, but it's perfectly fine for us. And you have to remember, we have money coming in on a regular basis as well. So we're kind of maintaining or growing our working capital, or have been for the last few months. So it's not a fixed pot, as it were, that's just going to drain down. It's a pot that's been growing as we've been spending it. Now, okay, you might feel comfortable as an investor if I had 5 million quid at the bank. I understand that. But I'm thinking, to be safe, secure as a business, but still gregarious, 2 million is a perfect amount when we've got money coming in. So no, it's fine, and I'm happy with where we are. It's the most comfortable I've been from a financing perspective, and I am the most nervous CEO with financing. It needs to be properly controlled and managed, and I don't have any concerns about where we are.
So presumably you would get it in the neck both ways. If it's less than 2 million, somebody would say you haven't got enough money. If it was more than 3 million, they'd say you've got too much money. You're just sitting on your hands. You're wasting time. You're not deploying capital properly. Is that the correct?
That's absolutely right. And I think you've just got to be sensible with this. My job is to spend the money that comes in primarily on work that can add value. And that's what we've been doing. And it literally is the case that when you see these warrant announcements and, we get 100 grand come in, then we think, right, where do we allocate? Every single time. It doesn't just go into the pot. I've got models and spreadsheets and analysis on how and where we can spend money. And I can see in front of my eyeballs every day how we can trim down our costs if we have to, go into crunch and protect mode if we had to, if the market turned against us, expand if additional capital comes in. And it's a continuous model that we flex and adapt as we move forward. We are in about the right place at the moment. Don't expect me to be a bank. Where we're just building up and building up and building up. Look, as our operations expand, we get a major discovery on our hands, and our share price is going to go up dramatically. Then, we're going to need further money in the future. Now, I want us to be positioned so that when that event happens, however soon it happens, we're in the place to be able to respond, to be able to go from 1 drill rig to 3 drill rigs and to push on aggressively. But where we are right now, I'm fine.
Right. A slightly cocky question, I think. Is this basically an investment trust company investing in 9 projects, or is the involvement much greater? what role do you see yourself playing over time? Are you going to stay as you are, or are you going to become more passive? What's the plan?
Well, I know it's a bit unusual, in fairness, because the traditional model is that you raise money, you spend a good chunk of it on management salary, and if you can, you throw a bit into the ground and do an occasional bit of exploration. We've been exploring in Silver Peak, Canada, with the drill program that we had to curtail because of the winter weather, but we're starting again in March, April. We've been exploring in the field in Arizona, US, on the gold project, the Alamo Gold Project. We're drilling part of the operational managerial team and on the board of Kalahari Key, where we're drilling the Malopo project, 2,500 meters of drilling. We're part of the team managing and overseeing the Heneti project in joint venture with Katoro, where we're undertaking the RAB drilling at the Heneti project targeting nickel sulfide PGMs. We've got exploration manager appointed in Australia over the gold joint venture, and we've got that full team set up, and we're ready to go exploration-wise. We've been involved directly in all of the discussions and management activities and operational activities there. We've been exploring in the DRC. First termite mound sampling, followed up by pitting and mapping, followed up by geophysics underway, as we've announced. And then, all being well, when we have the targets defined, we'll be drilling. We're directly involved in managing that operation. That we can't be more closely involved in managing operations than we are at the moment. Now, of course, travel limitations have made it difficult for us to get out to the field, and it would be nice to get out to more of these projects and see them, particularly with drill rigs operational, but we've not been able to do that. So fortunately, our model of having really strong local management teams has enabled us to keep really proactively going forward. Exceptionally high quality reporting coming back to us from across our projects. We have our competent person working with us, Nick O'Reilly, to oversee all the operational activities. So no, what we are is a company with effectively 5 AIM companies in one. We've got 9 projects because we work harder than almost anybody else I know. We've got the best quality team of advisors around us who are commercial alongside being specialists in their own field, whether it's legal, accounting, the technical side of the business. We use people who understand the commercial side of our operations. We're able to do far more than other companies. And we're gonna push our business hard until we find something. So I apologize if it surprises you that we can actually run a business so vast, so diverse. That we announce, on a regular basis about our business because we have so many interests and we're pushing them all so hard at the moment. But if you invest in one of my companies, if you put your cash, you take money out of your bank account and put it into the company's bank account, whether it's through a financing or through on-market transactions, we're going to use that and we're going to build a great business, and that's what we're doing.
So you've got your own momentum. It's like comparing the Beatles to Herman's Hermits. I mean, you're just more prolific. You know what you're doing. You've got the talent. You've got the skill. You've got the right people. That kind of thing. It's just that's you've got you're on a different level.
Well, we're running a commercial business. This is not a university research department. This is not a business set up to pay the board of directors vast salaries, notwithstanding whether there's any kind of share price appreciation and success for our investor base. We're here for one reason only, and that's to make a dramatic difference to the lives of our shareholders. And it's perchance that we've got, as board of directors, us and our connected parties have got 13% of the stock or so. I personally have got between 6 or 7% of the stock. And, we're hugely invested in this business. I think not most, that's unfair. I think a number of companies around the world in the junior resource space see that the management teams see their biggest gain to come through the amount they get paid. I don't. I see a big gain for myself if my shares, options and warrants rise in value. I've got circa, I think, 124 million financial instruments, shares, options and warrants in this business. If the share price goes to 20 pence in this company, after netting off my warrant and option cost, then we're looking at 20 odd million pounds. And that for me is a major driver. And alongside that, in the list of our shareholders, those that stay with us through this journey can potentially, if I do my job well, have some good fortune, make major discoveries, do good commercial deals, they can have some life-changing things happen to them. From Metal Tiger days, I remember the stories of people being able to pay mortgages off, people able to pay for family weddings, people able to get themselves out of, all sorts of different difficult situations, create positive outcomes in their lives. Now, no one should invest in these junior companies more than they can afford to lose at any time. We are in the risk business. But if you're in Power Metal Resources, I'm a chartered accountant. I spent most of my life working in risk management. Not only am I going for the big discovery, but I'm doing it whilst wrapping it in a proper commercial business that's run on a commercial basis with thorough, proper risk management wherever I can across our portfolio. So we're not overexposed, either financially or in a particular jurisdiction or in a particular commodity. So what you're paying me to do is to run a good business. So that's what I'm trying to do.
Well, I mean, actually, you touched about that was one of the questions which I was going to deliver to you. What experience can you draw from during your MTR days that will benefit POW? And I presume, making life-changing investments or life-changing a life-changing company for investing.
Yeah, I think so. That's the biggest thing. That's that you don't get actually many positive messages when the share price goes up. You get an awful lot of negative ones when it goes down. But I think that's the biggest outcome for me is seeing the individual transformations that have arisen from the work when it goes well. I think in terms of having that MTR experience and running the company, we ran MTR very, very hard. We did an awful lot of stuff. The pressure was really on. And, I was in my 40s when I was running MTR, but I didn't have the same degree of experience as I have now. And I've learned a lot of lessons. I've done some things, exceptionally well. I've done some things poorly. All the positives and all the negatives I've tried to bring into Power and build it in the right way. And the discussion about warrants before is absolutely key, because in MTR, when we made the big discovery, we had to go and raise money after that big discovery because our working capital was okay, but not great, and certainly not able to manage a big step up in drilling operations. So we did, I think, £1 million raise in April 16, and then another £1 million raise in August 16. And those are hugely stressful moments. With the model that I've got on financing with the warrants that I've had in place, that money's been naturally feeding into the company, taking some of the financial pressures off. I use more help and support than I did back in Metal Tiger days. If I need to get some assistance, I go and get it. I'm building our team, not crazily with stupid overheads, but I'm building our team as we go now, so that our commercial, operational and management structure is in place as we get to the discovery stage, so that we're not playing catch up. We're using very strong local operational teams. I've got great relationships with them, so that some of the pressure is taken off there. All these different things you just learn with experience. I've been chairman, CEO, non-exec director. I've been across multiple companies. Biggest lesson, Zach, is particularly from 15, 16, 17 days, is don't overstretch yourself. I just have one PLC company that's my focus at the moment. I do work on other boards connected with the family business and also but primarily with regard to the power business. But I'm just focused on power. That's all I want to do. I don't want to be across multiple roles. I'd like to see this business through. I'd like to make a difference in people's lives. It's starting to happen. I think we've got a fair old way to go, and we'll just have to see.
All right, I'll just ask you one more standalone question, which is a fun one, I hope, before just a quick tour of the projects, because there are a few straggling questions about each project, so we take a sort of helicopter ride over each of them after this. But what is your attitude to the danger of a surprise takeover bid coming prior to any major fines being announced?
Actually, it is a sensible point. Now, we do have a significant managerial shareholding, which is quite useful to protect against that kind of thing. we've got Haneti nickel projects, the large-scale nickel PGMs. We've got Malopo Farms, where we have up to 50.96% effective economic interest. Those are two strategic nickel opportunities. If they come off exploration-wise, we will be holding 35% of one and 51% of another. Does that make us a target? Yeah, every day of the week it does. It's just obvious. We've got strategic land in, through the joint venture in Australia. There are multiple other projects where we have significant material stakes and we have material potential projects. So yes, we are. Look, at the end of the day, if someone came along and wanted to buy out the company and it was on the right terms, then what would you do? You'd take it, wouldn't you? I don't even think about it in that sense. There's so much we can do to protect ourselves if we really wanted to. I'd rather just crack on with exploration. And if someone knocks on the door and says, look, we want to buy you out, matey, and here you go, then it's a nice problem to have.
I suppose from memory of previous cycles, you tend to get all the M&A right at the top of the market. The fact that there isn't any at the moment probably shows that we're still a long way from the top. So that might be a positive message in a way.
It could well be, and I think we are a fair way from the top, but it's a personal view. But I also think that there are on the hunt large and mid-tier companies looking for strategic assets. We're in a slightly unusual world, as everyone knows at the moment. Supply attrition, potential big demand increases. There is an acceleration in the effort of organizations to acquire new strategic interests and to get access to pipeline of good quality nickel sulfide projects, copper projects, gold projects, silver projects, that kind of thing. So I think we positioned ourselves well. We've almost positioned ourselves to be attacked. And as I say, as a large shareholder in the company, if someone decided to come along and make an offer, then if it was a reasonable offer, well, you put it to shareholders as always, wouldn't you?
And presumably, if you weren't vulnerable to an attack, you wouldn't be a worthy company in a way.
I think you've got to put your head above the parapet and say, look, here we are. Some of the transactional work we've done in the last 2 years to build the portfolio, we've entered into projects because it's been difficult market conditions. We've been able to partner up with great organizations and with great people on projects, and we've kind of rushed ahead at full pelt during difficult conditions. So when things strengthen, which they are doing and appear to be doing quite strongly right now, then those projects will be in a lot of people's vision, and you never know what can happen.
Right, I don't want to wear you out because I think we're approaching the 1 hour situation, and I'm sure you've got things to do. But just in Australia, any indication when the licenses will be granted? And a question that goes with that is, how competitive is the license granting process? Do you have other people trying to?
Okay, yeah, 12 of the 13 applications in the joint venture, we're not competing. It's Red Rock Australasia, so that's fine. We've only got the last application. There's competition where the license will be awarded on merit, but 12 out of the 13, so 2,188 square kilometres from 2,300 and something square kilometres, we're not competing against anyone. We don't know when the licenses will be granted, but we've moved through the stages of the granting stages. We have 3 priority applications that went in, and those we would expect will be the first grants, and we're just waiting for the day, and we're ready to fire up and go with exploration work on the ground, subject to any permits if they're required, as soon as possible. So we're very excited.
Right. How is the IPO progressing for the Australian joint venture? Do you have any timescales there?
Okay, that's an RNS-able event. So when we get material developments on that we feel it's appropriate to announce, we would do. We're obviously pushing this in all sorts of directions. Our priority is ground exploration because we're serious about getting cracking. We think we've got some fabulous targets in Victoria. We are also dealing with various parties who express an interest in what we're doing in Australia. That's a part of our work. We're also working with partners on the potential, I have to say, the IPO of some or all of the interests. We like to update. It's the power metal approach to tell people about what we're doing, and we will update as soon as we can.
Okay, going on to Botswana. What's your level of confidence with Malopo and after the first two holes, that is?
You know, we came along with Malopo. We, from a standing start, working with our partners, we've done all the preparatory work. We've sunk 2 holes down to, plus 500 meters. We've got all the technical analysis going on at the moment. I'm absolutely delighted with Malopo. We're going for major discoveries in that kind of territory. So what we've done thus far, fabulous, really pleased. We're just cracking on. Let's get this program done, do the whole lot. We're analysing as we go. As soon as we get material developments that we can announce, we will come back to market and we'll let the market know.
Is the JV with Kavango in the Kalahari Copper Belt another T3?
Well, I tell you what, that was a cracking discovery, T3. I think I might have been in Egypt when we got the call to say that we got 50 meters at, was it 1.97% copper, and the whole world changed. I would love it to be another T3, and we're just down the road, and we're working with great partners in Kavango, and we're cracking on with the work. Both of us just want to get going. Kavango recently raised 2 million quid. You know our working capital position because we talk about it in announcements. We're well funded. We're able to do the work, and all parties are just keen to get on with things in the Kalahari Copper Belt. Fantastic place to work. There's been some amazing discoveries there. Let's see if we can find the next one.
Okay, moving on to Tanzania. Why did the drill program at Haneti take so long to implement if the project has so much potential?
Yeah, it's funny when you communicate about where you are on each stage of the project, you can very easily get exposed because people go, well, why did that take 4 weeks, 6 weeks, 8 weeks or whatever? Operational programs, sometimes take longer than people can anticipate. Occasionally they're done faster than people can anticipate. The fact is, we're drilling, it's moving forward, we're operational. That's the key thing. And I think the downside of being so communicative is that you do get overanalyzed in that sense. So it took us a bit of time to get everything mobilized, everything set up and ready to get it actually drilling. But it's fine. It's doing the job and we're moving on. So I'm very pleased about that. There will be, in these programs, there will be operational delays from time to time. Now, I can stay silent on things and not actually announce and maybe just say, look, we're drilling started on Project X. And then 3 months later, say we've had the assays back and here they are. But I actually want to tell people where we are. I want them to feel with the company that they're on each of the projects. They know exactly kind of where we are. Not kind of day for day, week for week, as it were, but you have a good feel for where each project is positioned. And occasionally that will mean that something might take a bit longer than you anticipate. It should do, but it's usually for good reason. And of course, operationally, when you're in the field, then things can happen and slow things down, and you just got to manage it. And that's what any active exploration company has to deal with.
When do you expect results to be published from the drill program?
Well, as soon as we can. I'm eager to get stuff out to market. Don't worry about that. We don't hold anything back. Well, it's against the rules, and also I think people have a right to know. So, we will get updates out as soon as we can on everything.
Okay, just finishing off with the US of A. How big is the project there? Is it intended to be a material part of the business?
Yeah, every single project that we take on board is meant to be a material part. The Alamo Gold Project is something we spent a fair amount of time working on and building up to. A lot of the time that's been spent has been effectively securing additional parcels of land and pegging additional claims. The pegging process is a physical pegging process in Arizona. So you peg the ground and then you report and lodge it with the local county and the BLM, the Bureau of Land Management. So it takes a little bit of time to construct and build your portfolio. We absolutely want that project to be a significant part of the business. We're doing active work on the ground, as we've announced, and we will provide the results to market. It's interesting stuff. It's gold nugget mineralization and looking for a bedrock source. There's quite a few companies around the world that have been pursuing this type of project. It is only one of our 9 projects, but it is of itself quite an interesting, potentially could be a very exciting project. We'll have to see.
And finally, are you planning to add any other projects in the USA?
Yeah, North America we have a great connection base into North America. That yields us lots of potential opportunities. We may well do. It's a part of the world that I think the UK investor base likes to invest in. Over the last 10 years, I've seen a number of opportunities in North America. They seem to be well received by investors. So we would kind of automatically switch on to something like North America, and we'd look at it quite closely. It's similar to Botswana in the sense that you get opportunities in Botswana, then we've got some experience there, and it seems to be well received, Australia and so on. So potentially, yes. But again, as I said before, I don't want to overstretch the business. It has to be done on the right terms with the right team, but it is possible.
Okay, with the final comment, somebody saying you're doing a fantastic job. But as we run out of time, I can't go into that one, so we'll have to leave that for now. Maybe look at it next time. But looks like you've got sort of loyal shareholders, sending questions through, which is great, and maybe that's the name of the game for you.
Oh, okay. So what we'll do is, I presume we'll have a list of all these questions.
Yeah.
Logged. So any questions that we're not been able to get to, then in some form or another, we will respond to them. I do keep quite a close eye on what people are saying about the business. Not because I snoop, but because it's important that through RNS and through media work, we communicate what people want to know. So we will get back to everyone that's asked questions that hasn't been answered tonight. We'll do it in some form, and we'll do it in the near future.
Paul Johnson, CEO at Power Metal Resources. Thank you very much indeed.
Thank you, Zach.
Cheers.